G'day expats and welcome to another episode of Expat Chat, episode 133. Gosh, we're getting up there. As always, I'm joined with my co-host, Brett Evans, friend, colleague, business mentor, business partner. He is the managing director for the Europe, Middle East and Africa's region. Good morning, Brett. How are you?
All well here, thanks. All well. And to the folks on the call, viewing, listening with your earbuds, the silky smooth tones of joined with James Ridley, who's the managing director for the APAC region and carries many titles, that both personal and professional.
Thank you, man. And I'll try and put on my deep, silky voice. There we go.
Radio voice.
Mate, today we've got a great topic to talk about. It's something that I think a lot of our clients often ask the question because they're overseas for a very long time. They get very settled in their new country and they want to know, well, can I retire and be retired in both countries? Can I split my time in retirement between Australia and the US or Singapore or Dubai, Qatar, wherever it might be? Very common. I know I've seen a lot that want to split their time between Australia and Europe because they're just heading over to Europe, or the US, very common one. They're going down that pathway, getting permanent residency, a green card, or US citizenship, getting permanent residency in one of the Southeast Asian countries. So it is becoming more and more common. I think cost of living might be a factor as well, depending on where they're basing themselves. But I thought, what a great topic. We've no doubt talked about the topic briefly before, but I thought, can you split your time between both countries? What does it mean around tax residency, tax treatment of different assets? So why don't we discuss this? Won't discuss it ad nauseum today, but we'll discuss it a little. But before we do so, I'll get you to do the little disclaimer.
All the information we're going to share with you, good folks, today should be treated as informational and educational purposes only. Please do not construe this as personal advice. If you do need personal advice, reach out to a specialist like Atlas.
Absolutely, mate. And I think a good starting point is probably maybe a quick rehash on tax residency.
So, look, it's a good one. And it's excluding the US, most countries rely upon what we call residency-based taxation, which means are you legally in that country based on their predetermined legislation as a tax resident? The US is a bit different. US is citizenship-based, say that after a few beers, citizenship-based taxation, which means you're still on the hook, whether you're in the country or not. But I think what people, they need to go into more detail. And the reason being is there's like a layered approach. First of all, are you legally allowed to live in that country for the time frame you want to talk about? Let's talk about Europe. You highlighted that one before. Obviously, a Schengen visa means we're allowed to be there for 90 days at any one period of time over a 180-day period. So unless you've got a Euro passport, can you live there? That's the first question. If you go to places like Asia, different story. They're very welcoming with retirement visas and that sort of stuff. The UAE, they have retirement visas as well too. So first thing you need to do is work out with the area or jurisdiction or country you want to go to, can you legally live there? So, and then once you've got that sorted out, then you look at their tax regime and how they tax you. As you said, if you're tripping between two countries, say 6 months in Europe and 6 months back in Australia, you have to be a tax resident of somewhere. So, right. And it's funny how I look at the retirement aspect as two subsets. Subset number one is a couple who've been living in Australia all their life and their dream is to retire overseas. And subset number two is always been an expat and looking at staying overseas. And it's funny how the subset number two is a funny one that we deal with because they're pre-programmed to almost dictate their actions to retain non-residency. And I was talking to someone last week and I said, for the first time in your expat career, it's actually not a bad thing to be an Australian tax resident. And that just threw them like, what do you mean? For the last 20 years, I've fought with these tax residency rules written in 1936 and done anything I can to comply with it. And they said, tell me more. And I said, well, think about it. In Australia, from a tax optimization point of view, you want to have two assets. You want to have your PPR, your principal place of residence, and super. Both of those things are tax-free in retirement. So you can be a tax resident of Australia and not pay tax. Now, the important thing about being a tax resident in Australia is you maintain your main resident exemption. And then for those folks who want to use the downsizer contribution, you need to be a tax resident as well. So now suddenly you're a tax resident of Australia, how much time are you going to spend somewhere else? And that's that sort of joining the dots. So I always say to folks, don't move somewhere because of tax. Move somewhere because where you want to move, and then work out the ramifications. If you go to France, for example, France, like a lot of other countries, they would tax you on your pension because that's how their pension system works.
Yeah.
Now, if you're okay paying 20% tax on your allocated pension income payments from super, that's great. Now you just got to work out how to live in France. And that's the price of admission. Obviously, with that 20% tax, you do get things from it, in terms of social services and stuff. So there is a trade-off there. But you can do it. You need to work out where you're going to plant your flag. That's the most important part.
Yeah, I agree. And I think the conversations that I'm having with clients that are wanting to split their time in between Australia and overseas, it's almost like they're sort of really chasing the summers, to be honest. And right now, and if we do get the update finally to the modernising tax residency rules, we know that the new tax residency rules, when they eventually come back around, who knows if we will see them again with the upcoming election, but they're a lot stickier to being able to let go of your tax residency in the event you don't actually have any employment overseas. So they've got that employment rule, the overseas employment rule, as part of that. So it does mean that if we do want to have, well, I suppose 2 domiciles, 2 bases, it's very likely with the new rules, you're probably going to still be an Australian tax resident, but that's actually probably going to be in your favour when we break down the concessional tax treatment. If you had to sell the main residence, superannuation or an account-based pension in Australia being tax-free, that's amazing. I still think our superannuation system is one of the best and most tax-efficient retirement vehicles you could throw capital into. I just haven't seen anything else that beats it. With that in mind, you also get the concessions as a tax resident of Australia on other investments, the 50% CGT discount concession. If you've got investments within a trust, the ability to distribute capital gains and different income streams to the lowest individual in the family if they're all Australian tax residents. There's a lot of different ways that you can really carve it out. And then you might head over to Italy and you might stay in Italy for summer and autumn or spring and summer for 4 or 5 months and then come back because they've got some unique visas over there as well, as long as you're investing locally within a specific town or whatever it might be, buying property. You can get those 10-year residency visas. There's also a lot of golden visas, which we commonly see as well for the retirement visas. As long as you can support yourself, you can technically have a long-term residence there. So it is becoming more and more popular. I'm wondering whether we'll ever see the change in the old school tax residency rules of Australia finally obviously change over to the new ones. I'm not sure if we'll see that.
Look, it will happen. It's got bipartisan support. It's been recommended by the Board of Taxation. The federal government actually requested back in 2015 that this needs to be reviewed. Obviously, we've got an election coming up, and whoever wins that election will determine, I think, the speed. If Labor wins, then they've done a lot of work in the lead up to it. So therefore, it's more than likely to happen a lot quicker under Labor. If the Libs get in, then in their case, they might not be happy with the work that Labor's done in the lead up to this point and may go, you know what, we're going to go through it again. So, look, it's under the new rules, proposed rules, I should say, not the new rules, the new proposed rules. It's a lot more granular. And the day counts will be very important because whatever Canberra decides in their infinite wisdom is the final day count, whether it's 45, 60 or 90 days, that will determine how much time you can spend in Australia. Because if you do want to tread between 2 countries, that being Australia and another country, then under the new proposed rules, if you own property in Australia and you're there for greater than 45, 60 or 90 days, you're Australian tax resident. So then the important part is to look at what we call the DTAs between different countries you're looking at. So if you're looking at going to Italy, then under the new proposed rules, as you said, the employment rule, that sort of that earn out, that what they call it, adhesive residency test they're talking about. What it means is if you're going to a country with a DTA that has a tiebreaker clause, you can get out of the clutches of Australian tax a lot quicker. But also, too, you can't be treated as a dual tax resident of both countries under the DTA. Whereas if you go to a country like Hong Kong, the UAE, a lot of countries in Europe, Greece, Portugal, that don't have a DTA, then technically you could be considered a resident of two countries.
Yeah, that's right. And it's going to be very interesting to see what happens with that. I agree with you, actually. If Labor sort of wins, I think we'll see it come through again. I think Liberal wins, they might just take it back to the drawing board, throw out the old one and go, Board of Taxation, we want you to review this again and propose a new proposal. I think it's interesting. You're right about the DTAs as well. There's often a lot of confusions with double taxation agreements and the tiebreaker test, because that's not necessarily in every DTA because they're all different. Some
Correct.
will tax you on super, some there's carve-outs for super and government pensions, and they are very wordy, trying to understand, okay, if I'm entitled to Centrelink age pension as an example, am I only going to be taxed on that here in Australia, or am I going to be taxed on it there? And the franking credits, or the foreign tax credits, translate over there. A lot of Australians and retirees over in Thailand, that's a really common one. A lot of areas in Southeast Asia, because of obviously the cost of living, massive differences there. They can enjoy a very comfortable living standard, and they might only be spending 30 or 40,000 a year, and they're renting a nice villa, they're staying active, versus trying to do the same here in Australia, which is very difficult living off that, especially if they're having to pay rent as well. So it will be very interesting to see how these things unfold, but I really do believe we're going to see a lot more of this. I feel like that's going to be a key theme over the next 30 years, people wanting to split their time between different countries or two main countries based on where they've worked as well.
And I think it's going to be the people who, in their working career, have had that flexibility to be able to remotely work and travel. So it's like it's embedded into their DNA. We're already seeing it now with a lot of folks post-COVID who want to be able to work from Italy for 6 months of the year, and their employer's like, yep, okay, but that's fine. As long as you work Australian hours, we'll get your job done, then that's okay. So I completely agree. I think it's going to get bigger, and it's very green shoots at the moment, but I can see Fujairah, which is the most northern emirate in the UAE, so north of Dubai, becoming like a Florida for a lot of retirees, because the cost of living up there is a lot cheaper than Dubai.
Mm-hmm.
But we've got Wynn's Casino going in. It's going to be very much a big resort destination. The Wynn resort they're building there is monstrous. It's even bigger than the Wynn in Las Vegas. So, and there'll be, once that's built, others will build around it.
Yeah,
so you'll have very much a resort type environment, but you can still buy a nice apartment on the ocean for, call it $500,000 to $700,000 Australian dollars, and that entitles you to a visa to be able to reside here. And a lot of folks I'm talking to right now, the idea is from about October through to March, this is a great place to be weather-wise. From March through to October, it's a shit place to be. So what they're saying is, for 3 to 6 months of the year, I'll stay in Dubai, and if they need to get to the big smoke, Fujairah is only an hour away from Dubai on the 611, so it's very easy to get to. They're not in the whoop whoop, out of touch, but they've got a nice, quiet, sort of relaxing area. But they can then go to Europe. If they don't have a Euro passport, they can go to Europe for 3 months, and then they can go to Australia for 3 months. So now suddenly they're a tax resident of the UAE.
Yeah, they're not restarting their residency anywhere else. Yeah,
exactly. So that to me is one option I think that will become very popular over time. The only problem they've got to sort out in the region is health insurance. It is ferociously expensive for a 30, 40, 50-year-old, let alone a 70-year-old. So
you don't really pay taxes there, so there's probably not too much going into the public health system. I know that might change though in the future. We've talked about that before.
I think they're going to have to do something. The government's going to have to do some sort of subsidised seniors insurance program if they want to target that market. They're crazy not to, because you're at the doorstep of all the hub. That's why Emirates has done so well, of East and West. So, you can live here and go to Thailand for a month and be on the beach. Then you can go to Italy for a month. You can really sort of see the world from a central location.
Gosh, mate, I might have to pull you aside and see if you're working for the Tourism Council over there.
No, I was just thinking about the other day. It makes so much sense, because the killer for travel, as you know, is the distance. Whereas you can fly from here to Athens in 3.5, 4 hours.
Well, getting over there, I'll say this: getting over there, the jet lag's not too bad when you get over there. It's coming back. When you come back to Australia, it's like someone's just absolutely hit you or something like that. You've been hit by a bus because to shake it for a couple of days. But getting over there, I've found now that you can get into a good routine pretty quickly now. It's just coming back's a killer.
Yeah, and that's the thing. You land and you just keep going. And I think that's the other thing that folks are realising too is, if you always want to see the pyramids, that's 3 hours away. If you want to go see Petra, that's 2 hours away. Everything is very central and close to here. But if you want to go to UK, it's only 8-hour flight. It's a daytime flight. For Aussies, that's nothing. We jump on a flight just to jump for the day. So other countries are 8-hour flights. Like, for Aussies, that's hold my beer.
Yeah, I remember last year when I was in Italy for my honeymoon, talking to a couple that had flown over from America, and they were whinging about their like 6 or 7 hour flight, saying it was awful. And I just said, it took us 28 hours to get here. You guys are kidding yourself. Pull your socks up, Jesus.
Yeah, no, it's true. It's true, and I think there's with advancements, that'll improve. But I think the airline industry right now is more focused on fuel efficiency than speed. So I don't think that's going to change anytime soon. So for the folks out there hoping and praying for new versions of Concorde, I know there's one company I follow called Boom, who are rebuilding the Concorde right now. But I can't imagine it being a very economical way to travel for the time being.
Oh, no. Or just very expensive. I think it'll be a new class, not first class, just speed class.
Exactly. Exactly. But look, I think this, to me, it depends on where you want to go. Yes, it can be done. You will need to compromise. There's no such thing as 100% result. You will never get everything you want. But if you get more of this and less of this and you want more of something, then that's fine. You just got to find that balancing act between the two. It can be done. It's done every day. We help clients every day with that sort of option. But to me, it really comes back to just making sure that you do your homework first. Don't get romantic and just go all in, then to realize, oh, wait a minute, this is not like what I'm used to, or, I wasn't aware of that. We're very fortunate these days to have a lot of resources on the web and companies like Atlas to help people make smart decisions. And that's what it comes down to, making those smart choices.
That's exactly right, mate. And I think right there, that's where we put a pin in it and wind up for today's session. A bit of housekeeping. For those that haven't joined our lovely Facebook group, the Australian Expat Financial Forum, please jump in there. Very busy. A lot of Aussies all around the world helping each other out, dropping in questions, and I love seeing questions being dropped in, and before we can get to it, 4 other Aussies have jumped in and answered it. So if you have a question or a query, it's more than likely it's already been solved by either our clients or other Australians around the world. And that's the whole purpose of that group. Australians helping other Australians, mateship.
And one more bit of housekeeping, guys, we do rely upon feedback and reviews. So please do, James and I are vain. We're incredibly vain, as you can tell. So we need to feel the love. I look at him every Thursday morning. We don't see the people in the background. So show us that you're there. Give us a 5-star review, and we'd greatly appreciate it.
Absolutely. Thanks for stopping by, guys. Brett, see you on the next episode.
Thanks, mate. Take care.